43 years old and I just invested in stocks for the first time in my life. Hi everyone. I decided to post here because I'm anxious, scared, and excited at the same time because I finally saved up some money and invested it for the first time. I quit drinking beer and buying useless crap, and saved up don't laugh $1,000 and had it sitting there in a credit union with pennies for interest, and I didn't like that. I'm really kicking myself for not doing this when I was younger. I remember when I was in my mid-20s this close to making a brokerage account and getting started. And I never did it. Did this scare any of you the first time you got into trading? The first share I bought was one full share in the Vanguard VGT ETF. I know it sounds dumb, but it was pretty scary and exciting at the same time. My position is focusing 80 ETFs and sprinkle in some individual stocks to play around with. My primary goal is dividends and compound reinvesting, in the hopes that I can have a nice-ish passive income 20-30 years from now. I'm wondering what you guys think of my current positions. ETFs: VGT, VONG, VTI, SCHD, and SCHG. Stocks: I bought fractions of these: AAPL, AMZN, HD, JNJ, CO, MSFT, NVDA, O, RTX, WM, WMT. That was my attempt of diversifying. I have been reading until my eyes bleed, and I really have no idea if what I'm doing is considered smart or not. But for the first time, checking my portfolio today, seeing I'm up 1.24 with everything in green short of stupid Walmart. I'm up a whopping $10 and I think that's pretty cool now. How in the hell do I make that? Bajillions? Thanks for coming to my TED Talk. X200B. X200B. You've got way too many stocks in here. Just buy an ETF like VTI VUQQQ and you'll be set. I remember my first time. I was probably 19. I didn't know what the hell I was doing, but I felt the same. Don't listen to others. You got some solid picks along with good ETFs. I'm gonna give you some overall advice as a beginner. Don't day trade. Invest right now what you can afford to lose. Don't check every single morning and day. It'll drive you insane. Developing the discipline to invest and not sell based on a falling market is important. You're paying some money up front here to learn. Welcome and congratulations. Why so many stocks? I recommend taking your top 3 ideas and invest 25-50 in those. By top 3 as in high conviction that you'll hold those for a few decades and never sell even in a World War III scenario. Then with the other 50 buy just one forever, literally forever. Not just a few decades US index fund. People make investing too difficult. My first trade, I wouldn't call it an investment, was Dogecoin in 2021. Tears of joy. I wasn't scared, but was for sure excited. VGT VTSAX VMFXX for savings Berk, B and whatever target date fund suits you. KISS. Congrats D. I think an issue I see here is your heavy reliance on growth ETFs. I see you have VGT, VONG, and SCHG all listed. I would suggest sticking to VTI or VU. They hold a healthy balance of growth, value, and everything in between. That said, both VTI and VU hold only US companies. If you wish to include international, you could hold a smaller or larger your opinion position in $VXUS. And if you don't want to deal with managing all these ETFs, just buy $VT. Think of it like a 60-40 mix of VTI and VXUS. Good luck. If you have any questions or anything you want to discuss, feel free. All good comments above. My only advice is don't lose your head and panic sell if things goes down. Think of the longer term horizon and DCA if needed. Well, just my own opinion here, but you realize you don't really know what you're doing. That kind of puts you ahead of most people, to be honest, because most people don't know what they're doing but they think they do. However, if you look at statistics, your best place at making money from an asset growth perspective is to just cost average an SP 500 index. If you're looking for dividend income, that's a different story, but that's also something that you normally move to later in life because you don't have the growth potential. Congrats. Think of it as your shares represent ownership of the future cash flow of the company. If you believe the earnings will increase and the premium is justified, then you would want to own more of that future cash flow. Therefore, when the price goes down or pulls back, you can acquire more shares with your allocation. Wait out and just keep adding to it when you can. Watch the market and get a feel for which ones are more reliable. Make your own choices. Do not listen to the noise from the experts. If you don't know what you're looking at, just look at the 10-year timeline. I know they say it doesn't predict the future, but I disagree. That line is a good indicator of where that company has been and where it's going more often than not. If it looks overvalued, it probably is. So good luck with your account then, folded hands. Kind of boring to bother you with a book recommendation, but I do it anyway. Read Morgan Housel's Psychology of Money and feel equipped with lots of practical wisdom about financial decision making, the economy, and how your mind is affected by them. It is such a good book and gives you a broader perspective instead of telling you how to invest. Check out our Boggleheads. It will make your life way easier than having all of this. I didn't start investing until I was 40 also. But that was quite some time ago. When I was younger, there was no internet and the only people that bought stocks were wealthy people and brokers. I never heard the word finance spoken in any classroom anywhere until I got into college. Wahoo, you'll never retire no matter what unless you're a billionaire. You've told us that 80 of your position is ETFs and the rest individual companies. I don't see any problem with that to start with. You can adjust how you invest while you DCA into the market over the next 20 years. Personally, I'd suggest leaving what you've bought alone and carry on with the reading. A lot of the individual stocks you have are solid companies. Good on you, man. Never too late or too small to start. Also, the power of positive habits is addicting and the snowball effect is real. VU, QQQM, SCHD, 43 here and only been at it a while. Bought a bunch of different stocks. They went down and I panic sold and lost 15. That's the first learned lesson. Tried day trading penny stocks. Another 10 lesson. 8 ETFs slimmed to 3.95 if what I have is in there. 5 in a random stock I chose new and that's what I gave myself to mess with. 5 and if it goes up like 20 all the profits go back to the big 3. If you want some stocks, that's fine. But limit them to 5 and put the bulk of your money in VTI, VU and SCHD. Welcome to the stocks casino betting world. Keep try until your risk appetite reaches a peak. Like the saying about planting a tree, the best time to invest is now since we can't time travel. This is a hell of a time to invest though. If the market crashes, just remember for the dot-com crash of 2000, the market did eventually come back and all these years later were much, much higher. Those who panic sold and sat out would have missed out. Those who held their nose and rode out the crash profited. Time in the market beats timing in the market. Congrats, bro. It's never too late to take charge of your future finances. Do as much learning, reading and research as possible. Never buy fractional shares. Buy VU and that's it. Maybe a dividend ETF.